Hey, what's going on, everyone? So in this video, I'm going to share my top 5 investment stocks to keep an eye on as the coronavirus situation evolves. Now, this is the first time I am learning about the stock market, so I am just learning as much as I can and informing myself so that I can make informed decisions and not just take advice from people on the internet and buy stocks which people tell you to buy. It's very important that we can make our own judgment, and so that's why I'm sharing what I've learned. And so without further ado, let's dive into the top 5 investment stocks. Now, clearly, there are some industries that are much more seriously hurt by the COVID-19 crisis, in particular the hotel sector, airline industry, the cruise industry, banks, and retail. First, looking at the hotel industry, I've picked the Intercontinental Hotel Group, stock symbol IHG. Now, if we look at the stock charts, we can see that from its recent peak to its currently trading level, it has dropped over 25%, almost 30% from its recent peak. With a potential upside, if it trades back at sort of the 5200 level, we're looking at a 45% increase. Moving on, we have the airline industry, and I pick the International Consolidated Airlines, symbol IAG. Again, looking at the stock chart, using its most recent peak, it has dropped over 60% to its currently traded value, with a potential upside if it trades back at the 640 level of over 175%. Next, we have the cruise industry, and I picked Carnival, symbol CCL. Looking at the stock charts, it has dropped 70% since its recent peak, and from the current traded value to back to the most recent peak, we're talking of 250% return, which is massive, right? At the 3200 level, that is a massive increase. But again, great opportunity comes with great risk, and so we need to better inform ourselves, not just looking at the potential upside, but how likely is it going to rebound. Moving on to the bank industry, I picked the stock Standard Chartered with a stock symbol STAN. For this one, stock prices have dropped by 43% to its currently traded value, with a potential upside of 77% if it trades back at the 720 level. Finally, for the retail industry, I picked JD Sports. Looking at the stock charts, it has dropped roughly 40% since its recent peak, with a potential upside as of now of 67% if it trades back at the 850 level. Now, looking at the sort of history of this particular stock, you can see that it has been consistently rising, so it has been uptrending before the current crisis, which means the company was doing well. Looking at the balance sheet of the individual companies, for IHG, we have negative equity. Negative equity means that more money going out than money coming in. So that's something to be aware of. So for IAG, the airline company, we have total assets greater than total liability, hence the positive equity. However, the current liability is larger than the current asset, meaning the company might suffer from a liquidity problem and might not be able to pay its bills in the near term. They will have to rely on future investments or future profits to pay off their debt. For CCL, again, we have positive equity. However, the current asset is a lot less than the current liabilities, meaning the company might struggle to repay its debt. So for Standard Chartered, we can see again a positive equity, and we can see that there is no current liability. And this is because banks make money from the difference between the interest they pay to borrow funds and the interest they collect when they invest or lend out these funds. For JD Sports, we have again positive equity with equity ratio of 1.05, which is really good because it means that the company is not over leveraged, and also, as you can see, the current asset is greater than the current liabilities, meaning the company is generating enough income to pay off its liabilities. So now that I've covered 5 stocks in 5 different industries, I would encourage you to do the same. These are just my 5 picks. There are definitely a lot more out there. Now, obviously, different industries take different amount of time to recover. That really depends on whether the industry supplies services or products which are necessary for our everyday lives. So, for example, things like hotels, they are really necessary. Once people start move freely again, they're going to go abroad, they need a place to stay, they have to stay in a hotel. On the other hand, things like the cruise industry, the potential upside is 252%, but how likely is it going to go back to the level it was operating at before the crisis? People are going to lose confidence. It's not really a necessity for people. It's more of a luxury. So it might take a lot longer, maybe not in the next 1 or 2 years, or maybe never. Things like retail, once people get back their jobs or they can go to work again and get their full salary, people can have the power to spend, and therefore the retail industry should recover back to what it was trading at before. So it is down to you to find the stock which is justified for you, and look for the opportunity, and once the time is right for you, take this opportunity, take this drop as an opportunity to buy into the stock market, because there's no doubt that it will recover after this coronavirus ends, and it will end. Like I said at the start of this video, this is also the first time I've ever exposed myself to the stock market, so I'm also learning a lot myself to stay informed. So yeah, if you found this video helpful, drop a like. If it didn't really help you, leave a comment, say what I can improve on next time. That is all. Thank you so much for watching, and I'll see you guys on the next one. Take it easy.